evening and welcome to another episode of Poor vs. Standard. This is Poor here, and as always, we are not financial advisors, so any information within this podcast is for entertainment purposes only. Please don't sue us. Don't do it. As always, I want to thank the listeners and our patrons for sticking with us through everything, and with you, we've been doing this for almost a year at this point, which is insane to say to me. But thank you. We appreciate you. And if you feel like you get good value or content out of our podcasts and now YouTube videos, feel free to, hit the like, subscribe, find our Patreon page. You can see that in the episode description, or sign up for Webull or with M1 Finance and help us out and get some free stocks or cash yourself along the way. Okay, so let's get into it. What do you say? So, first things first, let's get into some of the stuff that's happened in the last week or so. I apologize that I didn't do a full episode last week. This one's still going to be kind of short just because, again, my parents have been on vacation, so they are not here. So I've been pulling double duty and taking care of two houses, and it's a little hot here, not going to lie. So I've been trying to outfit my studio here with some air conditioning. I had it turned on to cool down this room, but the fan and stuff just didn't make the audio quality pop like I wanted it to. So anyone who has any ideas on how to fix that, by all means let me know. But until then, I'm kind of running without AC in here. So while it is cool, it is going to heat up, and I'm not going to be comfortable doing this for very long. So that's neither here nor there. Anyway, so we'll get into it. What do you say? So, market news. AMD is going to be buying back $4 billion worth of their stock, which is roughly close to 4% of their entire, float. So that's that should raise the price on AMD pretty good. Plus, with their earnings coming up and things, that'll be good. There's been a lot of microchip news as of late, and I covered the AMD thing because NVIDIA kind of they announced a 4-for-1 stock split, and if you guys have been with us, you remember when Apple and Tesla split, the price shot up dramatically before the split, and then afterwards kind of just sat around, did nothing, and now Tesla's, dropping again. But it's still above. I think they're both above where they split from. But those are also two of the biggest companies on the planet. So NVIDIA not being one of the biggest companies on the planet, it's apples and oranges. But that will give NVIDIA a float of over 1 billion shares, which is a lot of shares, especially at the price they're at. So I mean that's going to be a lot. You're looking at like $500 billion company, so that does put it up there pretty high. And South Korea has plans to spend over $450 billion to try and not corner the market on microchip technology, but they are offering a lot of incentives for microchip manufacturers and things to build in South Korea, and they want to win that market, and they're pulling out all the stops to get there. 450 billion is again, that's most of NVIDIA's market cap. So a government is willing to, throw that kind of money on the table to try and get that kind of production within their boundaries. So that's something to look at. South Korea doing some stuff. You'll also note that there's been a lot of discussion on homes in the market as far as housing, and if that's going to continue to go up, if we're in some type of housing bubble. And it's still too soon to tell, but there are some indicators that some people believe mean that we are starting to cool off as far as housing goes, because people understand that this influx in price is temporary because there's no actual market. Like, there's nothing on the market. So they're trying to wait and bide their time to buy houses. Some of them just want a house, and I get that. But a lot of people are waiting because they know that it's inflated right now, because inflation is a thing that's been happening in all sectors. And I just, personal note, I find it kind of funny because I live in a municipality that just sent out a letter saying that they're raising the property assessment of all the houses in the municipality by 6%, because I live in New York and New York likes taxes. And it's funny because in their letter they said this doesn't directly affect your taxes, but it really does, because you're taxed based on the assessed value of your house. So it's like they don't think we understand how that works. And not only that, but school taxes are also directly impacted based on the assessment of your house. So the assessed value does directly impact your taxes. So it's really just like someone thinks everyone who lives in the municipality is a bunch of idiots. But yeah, so it's very interesting that they're trying to increase the assessed value of all the houses in a municipality based on what, as far as the Fed has said, is short-term inflation. So they're taking the government believes is a short-term problem and turning it into a long-term financial fix for the municipality. And I think that's absolutely asinine and stupid, but that's neither here nor there. So if anyone knows of anywhere outside of New York that's looking to hire a, podcast professional, market analyst, that kind of thing, I'm there. But I digress. There is discussion that the housing market is maybe beginning to start cooling off, and the price rises, that astronomical, almost parabolic price rises you've seen in the housing market, may start to subside a little. They're not going to go back down to where they were before pandemic levels, but they should start easing as far as the increase in property values and things like that. So, I mean, I have a friend who literally just bought a house. They looked at it the day it came on the market and put in an offer above asking, and there were already 3 other offers, which is insane to me. Like, in where I live, it's not the biggest place, but yeah. So that kind of thing should subside soon. Probably not through the end of the year, but I mean, by summer of 2022, you should see more houses on the market, I believe. And a lot of people may have their houses foreclosed on, as there's been this giant mortgage moratorium and things like that from the federal government, which I don't know how that's been a thing, but it is. So you may see a lot of evictions coming. That's another possibility, and that could free up a lot of houses in a shitty kind of way. But it's definitely one thing to keep your eye on, is property, real estate, and that kind of thing, as far as just watching that market and seeing what happens, because it can directly affect a lot of other things. So just watch that for sure. And as far as the week in the stock market, honestly, the S&P it was almost even. It was down a couple points. It wasn't that bad of a week. I mean, it started out okay, and then in the middle of the week there was a massive downturn that kind of shit on everybody, but by the end of the week it had corrected most of that, and we ended the week almost flat but a little down. So at least the overall markets did. Your portfolio, based on what you're invested in, may have been more red than the markets, especially those high growth stocks. Yeah. So I want to take a look at, because we didn't do this last week because I didn't have the time. I wanted to take a look at how cryptos are, and base 2 weeks ago prices versus, the prices this week. And we'll go over the recovery stocks that we've been talking about. So 2 weeks ago, Bitcoin was at 57,490. And currently it's at $34,645. See, it just changed. Ethereum was at almost $4,000 at $3,915, and currently it's at $2,088. It was below 2,000 an hour or so ago. Litecoin was at $359, is currently at $142, more than a 50% dip. And Cardano was at $1.81 and is currently $1.31, so that's 50% or 50 cents off, not 50%, excuse me. Yeah, and everything in crypto has been super red. We're actually going to discuss the crypto crash as the meat of the episode right now, once we're done with the market update. So the actual stocks, not the crypto space, we've been covering these since November 7th of 2020. And as far as when we started, this was the day that Pfizer released their vaccine. And we believed that everything would start to rise. So without further ado, let's check that out. So SPY was 358 when we started watching. It's currently 415. Carnival Cruise Lines was 1937 when we started watching. It's currently 2717. Wynn Resorts was 102.25. It's currently 127.40. JetBlue was 1505 and is currently 1943. Delta Airlines was 3677 and is currently 4523. American Airlines was 1325 and is currently 2258. Royal Caribbean Cruises was $75 and is currently $82.82. That's nice. The Cheesecake Factory, ticker symbol CAKE, was $37.50. Currently $55.77. Dave & Buster's, ticker symbol PLAY, was $24.75. It's currently $41.16. Pfizer, the kickoff of all this, was $40, just shy of it when we started watching it. It's currently $39.95, which is just shy of it. There have been dividends in there, so, you would be up if you had bought it. Not by much, just basically by the dividends, essentially. So the real estate REITs, those have changed as well. Ticker symbol O, which is Realty Income, was $63.05. It's currently $66.58. Store Capital, ticker symbol STOR, was $31.35. It's currently $33.55. And Vicky Properties was $24.78 when we started covering it. It's currently $30.99. Now, the REITs also give out hefty dividends, so you'd be up on those even more than the price of those would relay. So, but overall, every single one of those stocks is up since November. Every single one, and they're up pretty decently. So, if you'd had invested when we started covering them, except for Pfizer, you'd be up. I mean, even with Pfizer, you'd be up, but not as much as some of the other ones. This kind of, if you're able to beat how, SPY went from, 358 up to 415, it's a pretty decent percentage. So if you can beat that, you've technically beat the markets. So good for you. So that's the update on that. It's interesting to see that everything, even though it's, a little, I left the actual prices from when I covered these 2 weeks ago up on these, just so you could take a look and see where we are based on this from 2 weeks ago as well. If you're watching the video, that is. So with that, let's get into the meat of the episode. What do you say? So crypto has been just on an absolute tear since the beginning of the year. I mean, at the beginning of the year, it was somewhere in the 10,000, 15,000 range, not even. And we've shot up all the way to 64,000 was the high. And now we've retraced almost 50% from there. And with some of these from their highs, we have traced I mean, Ethereum was $4,500 at the high. It's currently trading just over $2,000. You've lost 50% if you bought at the high. Litecoin, over $350. Currently trading under 150. Over 50% of that gone. If you bought Cardano when it was over the $2 mark, and now it's $1.30 again, it loves to come back to that number. That's a huge portion of the money you invested gone. So these wild fluctuations are nothing new to crypto, and you will see article after article about, you know, the crypto crash and all these things, and Mark Cuban saying, "Oh, this is a good thing because this is deleveraging and blah blah blah." Like he sent out a tweet, I believe, about how people had bought things like Ethereum and then used that Ethereum to leverage it into buying these altcoin tokens that are built on the Ethereum network, and this crash has basically unwound all that by making people drop their shit coins and things like that, and basically any leverage they have to get rid of and dump like you would in like a margin call kind of thing. How much of that's true, I don't know. I don't know of anyone who's been buying any crypto on margin. It seems like a really stupid proposition to me to buy one of the most volatile assets out there on margin. That would be like buying Tesla calls and puts on margin. I wouldn't buy a Tesla call or put with cash because it's so volatile. You can make a lot of money. You can lose your shirt in a matter of a day with Tesla. You can do it in a matter of hours with Bitcoin. And again, article after article, you'll see just absolutely talking about how, oh, woe is me, Bitcoin's dead. And I mean, there was an article about how the mayor of Chicago, Lori Lightfoot, said Bitcoin's dead, and like all that. Like, she is a mayor of a city that is not doing so well right now, ripping itself apart. Highest murder rate in all of the states at this point, I believe. Yeah, she knows jack all about crypto. She doesn't have a background in finance. And I'm not saying that you need to ascribe to people who have, you know, doctorates in finance and things like that, because you can learn a lot just through your own studies. You don't have to be a so-called expert, but she doesn't know anything about crypto because she hasn't done anything in the space. She hasn't ever said anything other than when this all hit and she read a news article saying, oh, crypto's dead. It's like, people like that are really the kind of people that grind my gears, Peter Griffin style, just because they start talking about things they have no idea about. They just say it because they have a platform and they read one thing on the internet. Like, that's not research. That's stupidity. The internet never lies, right? No. It really upsets me that people who have station like that can use their platform to increase the fear and doubt and uncertainty that's already there. And a lot of them do that, and it's not because they're dumb. It's because they want to increase that fear and uncertainty, because they want you, the normal person, to get rid of your positions. There's a movement going on in crypto that is basically people who believe in it, people who've been buying it, know that this is a transfer of wealth. There's a lot of people that are backing it up that are, I mean, there was an article about how Goldman Sachs is working. They just released a way for their ultra wealthy clients to start investing in Bitcoin. And there's ways for you to write derivatives like options on Bitcoin now. Crypto's not going anywhere. Crypto is around to stay. It is a new asset class, and the rich and wealthy have recognized that at this point. And because of that, they want cheap prices so that they can fortify and get their positions. And by crashing the market through derivatives and things like that, they are absolutely willing to do that and lose a little bit of money to get all these paper-handed people to drop their positions so it will go down even further so they can buy them, because they know that this is going to be a very successful asset class because it works. It does what it's supposed to. And there's about probably the top 3 to 5% of all cryptocurrencies will do very well over the next decade. Very well. Bitcoin, Ethereum, Litecoin, a couple others, Cardano, smart contracts, things that can basically give you workarounds for having to hire people through the use of the network. Those will do very well. A lot of these things are just money grabs from a lot of different people who know that crypto's hot right now and they're trying to get their share. I respect the hustle, but I think it's a lot of scammers and bullshit that are trying to steal things. There are some great startup cryptos and tokens on the networks like Cardano and Ethereum that are working very well, and they actually solve a problem. But there's a lot of these things that don't solve problems. There's a lot of them that are just like the Shiba coin, that new one. There's no value to it. And it's not because there's no value to crypto. It's because there's no value to it. It's because there's nothing it's solving. It doesn't solve any type of problem. The Shiba Inu coin. Safemoon doesn't solve a problem. So that's one that people love. People love this Safemoon token. I think it's absolute garbage because they impose a heavy fee if you sell it. And then they distribute that fee amongst the rest of the people who haven't sold it. So the last person left gets all the Shiba coins or the Safemoon coins. It's the whole premise of it just doesn't work for me. I can't back something where I know it sounds like a rip-off pyramid scheme. And that's my opinion. I'm not trying to, make you not invest, do your own research, do your own due diligence. But you really you have to, look at what utility does something have. That's why you invest in companies when you're investing in stocks. You want to know what that company does. You want to know what utility, what new novel thing they're doing, or what product they have that no one else has that can compete with them. And that's why you invest in those companies. Those major growth companies, you invest in them because they have really great ideas and they have a brand new product that no one else has. And those hyper growth stocks are going to go off once that thing, gets approved by the FDA or whatever. As soon as they get the backing, the funding, that it's going to go off. That's why you invest in those sorts of companies. You invest in an Apple because it's reliable. You invest in a Tesla because you're crazy. Just kidding. You invest in Tesla now because Tesla is a giant. It's not going to go anywhere overnight. You invest in Apple, Microsoft, Facebook because that those are around. They're solid stocks and they're going to be here to stay. They're continuing to innovate. They're continuing to add products and services to their overall portfolios. Once a company stops innovating, it's dead. That's the way it is. And that's true of the crypto space. If that crypto doesn't solve a problem, there's no utility for it, eventually it's dead. Dogecoin is a meme. People love laughing until they start losing money. That's the way that is. So your meme coin, Doge, I've never invested in it. I never will. And that's, at least that one, I can see having some type of utility as an actual currency because it is inflationary like a US dollar. They keep making more, they keep making more, they keep making more, and they never get rid of any. So it does inflate. And it's a constant rate of inflation, so it's predictable. So you can know that it's going to be exact. It's not going to be like, oh, we have to drop $2 trillion every couple months for the next couple months just to get through this rough patch. That's not going to happen with Dogecoin. That's not going to happen because that is on a program. It is on a blockchain that dictates how much is going to be printed at every specific time. So there may actually be a utility to Dogecoin because it's not deflationary, it's not deflationary like a Bitcoin. It's not where there's only ever going to be 21 million. It's not deflationary like an Ethereum or a Cardano where there's a burn. Like every time a transaction is transacted, there's a burn on the actual amount of Ethereum allowed. Like some of it gets burnt, destroyed, put away, taken away, it's gone. Even though they keep printing more with the blocks and the stakes, so there's more being produced, and it is in that sense inflationary, but it's also got a deflationary mechanism to it, so there's a balance there. But yeah, it's very interesting to me that so many people are willing to put so much money into all these altcoins and things that they don't know anything about. And you have to treat these investments like you would any other investment. You have to know what you're investing in. And that's my word of warning to you as far as the crypto markets. And I know that this has been the bloodiest of bloody for the last 2 weeks. And you are sick and tired of people telling you to buy the dip. But I'm going to tell you one more time because you will regret not buying when it's this low. 2011, 2013, 2015, 2017. I wish I'd bought Bitcoin when it was pennies. I wish I bought Bitcoin when it was $1. I wish I bought Bitcoin when it was $100. I wish I'd bought Bitcoin when it was $1,000. I wish I'd bought Bitcoin when it was $10,000. The next time you're going to hear people say, I wish I bought that dip when Bitcoin dropped down to $30,000. Bitcoin will eventually reach 250,000. No questions. And I don't know if that's because Bitcoin is going to skyrocket in price or if there's going to be so much inflation that it causes that to be worth it. Either way, you're probably safer holding the Bitcoin than you are actual cash. Now, I am not a financial advisor, as I always say, and I am not telling you to buy, sell, whatever, Bitcoin, Litecoin, Ethereum, whatever. I am telling you to do your own research, and diversity is the name of the game. And I am telling you that I am buying. I've been buying every time it's dropped $5,000. And if it drops back down below $30,000, I'm not putting a mortgage on my house, but I am going to continue to buy. I'm not going to buy any type of Bitcoin with debt, but I am going to buy. There is a value in it. It solves a problem. It is here to stay. Rich people are investing in it. Food for thought. Buying it now, you may be a lot happier with your decision making in the next 4 or 5 years. And say, man, I'm glad I bought when it dipped down to 30,000. Not, I wish I bought when it dipped down to 30,000. But that's my 2 cents. So with that, I guess we can get into the portfolio overview. So we are down. We did drop all the way down below 25,000 over the last 2 weeks. Currently, we're back up to 27,000, just over it. And let me see where that was based on. Yeah. So 2 weeks ago, we finished at 28,859. And the portfolio is currently valued at $27,080. So we're down, what's that, roughly $1,800. It sucks over the course of 2 weeks, so roughly 900 per week. CLOV didn't really do me any favors, not gonna lie. I lost over the course of the last month. I've lost roughly $7,000, $5,800 on it. I did buy shares of it when it dropped below in the low sixes. I bought about 210 shares, and I'm holding those, as this may be a play that squeezes like AMD and GameStop before it. Even if it doesn't, I've looked into the company, I've seen its worth. I believe a fair market value per share is anywhere between the $25 and $30 range. I don't know why the market is so insufficient on this, other than there is a massive short position in this stock right now, driving it down. And people apparently just don't like Chamath SPACs right now, and this was a Chamath SPAC. There was a federal investigation, which I believe they've been cleared of, SEC investigation they've been cleared of, and Hindenburg has been launching attacks against it. And Hindenburg has been right, about as often as a broken clock. They nailed Nikola on the head, but other than that, you'd be hard-pressed to find something that they have gotten right. Normally when Hindenburg Research says nasty things about a company, and you will see a small drop in the company, but within 3 months you'll see that company shoot up, because Hindenburg they're not all that good at what they do, because again, they're right twice a day like a broken clock. So something to keep in mind. I didn't have time to do any type of swinging for the fences play this week, and for that I apologize. But yeah, this is where we're at currently. We're at 27,000, and I'll keep you updated via Twitter, which you can find us at vs_poor on Twitter, as far as any moves I make in the portfolio, anything that I do to the portfolio, and if I do any options plays this week. Last couple of weeks I've been not doing a lot of options, just based on the CLOV issue that I had, and we'll see. I did buy a share of Coinbase when it dropped to $217, just because at that valuation it seemed to make sense to me. And if it goes back up, to $250, I've made 10%. I can sell that share for a 10% gain. So that doesn't seem like much, but $217, that's 20 some bucks at 10%. 21 or whatever. But yeah, that seems like a decent thing to do with Coinbase, because it was so low. It was the lowest it'd been since, well below its IPO price, and people who bought it in the 400 range are, down to half their value already. It's a lot of the crypto stocks have felt the burn of the crypto sale. So things like Mara, Riot, and even the Voyager Digital, they've all been dropping with the price of Bitcoin. And it's funny because even though Bitcoin and the crypto market in general has been dropping, these companies are still profitable. It doesn't affect how their money is made. Like Mara, for example, is a Bitcoin mining company at this point. Marathon Digital. They are still profitable so long as Bitcoin stays above $20,000. It may even be cheaper than that, like 15,000. But yes, the fact that Bitcoin shot up to 64,000 just meant that Mara was absolutely on a tear, and their stock price has come down quite a bit from their all-time high. Same with Riot. And they've been using their profits to buy more miners and things of that nature. So it's, the fundamentals of the company aren't as tied to Bitcoin as you would believe based on the stock price, especially with Coinbase. Their profit comes from the transactions. So if there's a massive sell-off, there are more transactions. Coinbase gets more profit. It's very interesting, but yeah, I'll again let you know as far as what the stocks are gonna do, and we'll go from there. So with that, I appreciate everyone who's been watching along on YouTube, and I will have this out as a podcast shortly here after I post to YouTube. Thank you so much for bearing with me while I, do double duty at my parents' house as well as my own. And we'll get back to normal next week with every piece of the episode, I promise. And with that, thanks for listening. Be well. Trade safe.